Becca, thank you for joining me. You are the COO at AnchorWatch, and you guys recently launched the Trident Vault. And at first glance, for me, this looks like an amazing step forward in Bitcoin custody. Can you explain exactly what the Trident Vault is, and then what problems it's solving?
Sure. Thanks for having me. I'm happy to be here. So, jumping right into it, Trident Vault is an advanced custody option that kind of takes existing custody to the next level. So, there's basic Bitcoin custody. There's kind of the next level of security was looking at multi-sig. Multi-sig has been around for more than 10 years. And really, this is using kind of advanced Bitcoin scripting, and it takes it to the next level. So it's the most recent iteration of cold storage and how it can be used. But I think it might be good if we actually take it back to kind of the very
Hmm. Yeah.
basics of Bitcoin custody and start there, and then I can kind of roll right into Trident and how it's going to the next level. So if we just want to get out of tech speak and into kind of what we mean by Bitcoin custody, there's an analogy that we like to use when we were trying to explain. Our product is an insured custody, so that's specifically what AnchorWatch is doing. And so we liked to use this analogy to explain what we even meant by custody when we were explaining this product to the reinsurance market and to Lloyd's of London. So I'll just start there. So picture that you are walking into a post office, right? And so you go into this post office and there's a wall of PO boxes, just like you're familiar with. The only difference here is I want you to picture the PO boxes as being clear doors. So thick glass or thick plexi, something like that. And so what that means is anybody can see what is inside each one of those PO boxes, right? And there's a little mail slot that anybody can put mail into the PO box, but only the person that has the private key can stick that key in the door, open the door, and move what is inside. So when we're talking about custody, that's actually what we mean. If you buy Bitcoin at exchange and you leave it there, they have that private key. And so you actually have an IOU and you're trusting that they're going to take good care of it. And so when then we talk about self-custody, what you're asking is the exchange to say, "Hey, can you move the Bitcoin that I just bought? I'd like you to move it out of your PO box and into my PO box, the one I have the key to." So that's just basic single sig where one key can control that door and
Hmm.
control the Bitcoin. Then multi-sig came around, right? Where we're talking a 2 of 3 or a 3 of 5. And so what that means is the door has multiple keys, and you need at least a minimum number of keys to open the door. So if we're talking multi-sig 2 of 3, let's just keep it there, keep it simple. There are 3 keys that can open the door, and any 2 of those 3 can be used to open the door.
Hmm.
So that's multi-sig. And there are collaborative custodians out there that have built businesses around holding one key for you. So that way, if you lose one, even if you lose one, they're still there to provide that backup. So that's their business, is they're holding a backup key for you. But if you still have your 2, you don't actually even need them. You can control it yourself. So now
So
let's
what are the issues with that model, right? So if I have two keys, Becca, you're a collaborative custodian, you have one, how does this, like, let's say I die and I lose both the keys and then my wife doesn't know how to get them. Like, there's probably a lot of issues here. You elaborate on kind of the
yeah,
shortfalls of that model?
yeah. So I mean, I would say the premise of collaborative custody is it is removing a single point of failure, and that's true. It's a good service, right? And so it's saying, look, something can go wrong, and even if it does, we'll be here. And I would say there's 2 limitations. So one is that really it is removing one single point of failure. That whatever that one is might change, but like it's really just saying you can lose one key for any reason, and we'll be there to back you up. So that's one limitation. It's just that the risk vectors are kind of limited to one problem. And the second issue is that, at least as it exists today, is there's no actual guarantee. So one of the limitations is you're like, all right, so I like this idea of having a backup key. So if something goes wrong, they're going to be there. But what if they're not? What if they don't? What if they can't sign? What if they don't sign? What if they've gone bankrupt? Like, then what? Like, what's the solution, right? So
Hmm.
so there are limitations there. It's still very robust. It's still providing a great service, but there are limitations.
Hmm.
Okay.
Like for example, if let's say we won't use any specific companies as an
Yeah.
example, but a U.S. based collaborative custodian, and let's say they put sanctions on me as an individual for whatever reason, and I lost one key, they could be forced by the government to say, hey, no, you can't sign a transaction for this individual. Is that kind of what you're alluding to here?
I mean, I would say, like, honestly, that's a hard problem for anybody anywhere, right?
Right.
If the government is going to come in and try to impede any kind of key management, that's tough for a business to resist anywhere, right?
Yeah.
So I would never lean on a company to go to jail for me. If they're promising to do that, I wouldn't believe it. I
Yeah.
don't think the leaders of a company are going to do that. I would say more, I'm thinking about like your own example. You die, maybe your wife, she knows where one key is, or she doesn't know where your keys are at all. Let's
Hmm.
say that. Like, in that case, the collaborative custodian can't help you because they only hold one of the three. And so if your wife doesn't know where either of your two are, she doesn't know how to control them, she doesn't have the seed phrase, she forgot the instructions,
Hmm.
the house burned down with the instructions in the file cabinet, right? Then they can't actually help you. So they are a good backup. They are not a failsafe. And so what AnchorWatch has tried to do through both technology and insurance is try to come in and say, look, there's more advanced technology available on Bitcoin. There's more advanced vaults that we can do. And so let's utilize the tech and
Hmm.
maximize the utility of what already exists on Bitcoin today. So we've built an incredibly robust technology solution that protects not against just a single point of failure, but against many, many points of failure. And the areas that still could fail, you die with all your keys. The company providing the tech is a bad actor, commits fraud, things like that. There's still areas of weakness. And everywhere possible, let's plug those holes with insurance, right? And so
Gotcha.
we're combining those two. So if you'd like, we can go deeper into then Trident Vault and how we're taking that concept of multisig to the next level.
Yeah, let's do it because it looks like you've got four kind of layers here in this diagram and it progresses over time. So let's just start here with layer one.
Yeah.
I sign a 1 year policy with AnchorWatch. We're using the Trident Vault. How
Yeah.
does it work from layer one? And then let's go through each of the
Yeah,
layers.
sure. So the one thing that I think, just to tee this up, that's really important to explain is that Trident Vault uses what are called time locks. And so time locks, nothing we've discussed so far has involved time at all. Just if you have those keys, you can stick them in the door and control the Bitcoin, right? So what time locks say is that if the smart contract on a multisig, just a basic multisig, what we were talking about before, picture it as an if-then statement, going back to school, right? So if two of your three keys sign, then move the Bitcoin. And so that's it. It's just if two of three at any point in time, move the Bitcoin. So now we can take this a step farther and we can say, if those keys sign and a certain amount of time has passed, then move the Bitcoin. So it introduces time. And what you can do then is you can actually put in multiple spending options that behave differently as time goes on to mitigate lots of different risks. And so if you had all four layers on screen here, what this actually is how a vault, an AnchorWatch vault using Trident, how it works over the course of 1 year. So we sell 1 year insurance policies, and starting at layer one is on the first day of your policies. So the first day you become a customer, and it changes over time. Additional ways to move the Bitcoin open up. And then what I like to actually first call out, and then we'll dive in, is at layer four, Layer 4, you'll notice if you go straight down there, that is actually after your insurance policy ends. So when AnchorWatch no longer has any liability for you, it actually, using one of these time locks, is just a self-custody basic 2 of 3. So that way, that is mitigating this idea that AnchorWatch is a bad actor. What if we disappear? What if we refuse to sign? What if? Well, in any of those scenarios, as long as you still have your keys, as long as you still have your signing devices, it's just a self-custody vault. And then every year, though, we sign a transaction, which effectively kind of restarts the clock. And every year, then we start at layer 1. So now to your question of layer 1. So with layer 1, on day 1, what we're able to do is actually do multiple multisigs. So the customer has their own keys, their own 2 of 3. These are the same keys that would become self-custody at the end. And the smart contract is actually if 2 of 3, your keys, and if 2 of 3, our keys, then move the Bitcoin. So it doesn't turn into 4 of 6. It's actually 2 independent 2 of 3s, and they both must sign and they both must satisfy their spending conditions, and then the Bitcoin can move. So that way we're protecting the customer from a variety of different things. Just if your keys get stolen, like what happens? Well, nothing happens yet because we haven't signed the transaction. So your keys can be stolen without actually causing a loss of Bitcoin. So then halfway through the policy, time goes on. About 6 months in, then a new time lock opens and it becomes a customer 1 of 3 plus the AnchorWatch key set. So now it's if 1 of 3 and if 2 of 3 AnchorWatch, then move the Bitcoin. So now we've got something that says, okay, well, what if Mitch lost 2 of his keys? Okay, even then, we're still good. Let's wait a few months. When it opens up, as long as he still has that 1 key, we're good. We'll sign the transaction and we can move the Bitcoin to a new vault, that doesn't have lost keys, and we're good to go. No Bitcoin has been lost. So then we keep moving down over time. Now we know
Mitch messed up and he lost all his keys, right? And so
that so now we're getting into like serious business now. So let's talk about why we have layer 3. So if you look there, yep, you've zoomed in. So on layer 3, we've got the AnchorWatch key set, and we've got a key set held by a third-party custodian. So the third party in our case is an amazing company called Coin Corner. They're a regulated exchange. They operate out of the Isle of Man, been around 10 years, been holding customer funds that whole time, never had a loss, super reputable. Now they have their own key. It's not our key. It's not your key. So nobody has backups of each other's keys. But if something happened, let's say somebody put a gun to your head and said, hey, I know you have a lot of Bitcoin. I'm guessing it's multi-sig, since it's a good amount. Give me your keys. So you do, right? You take them to where you have the first one hidden, and you give it to them, and the second and the third one, and you're like, take them. I want to stay safe. I want to keep my wife safe. You hand over your keys. You call us. And you're like, oh my goodness, this just happened. All my keys are gone, all my keys. So layer 2 isn't going to help me because I don't have even 1 key. What do? We'd say, all right, at this point in time, when we get to layer 3, when we get to the recovery layer, we, AnchorWatch and Coin Corner together, can come together and we can move the Bitcoin for you. So we can set you up with a brand new vault that has new signing devices that isn't impacted by this loss. And we can move your Bitcoin to safety. This is super important because if we waited, remember, those stolen keys will control your vault soon enough. When you get to layer 4, so far they only have your keys. They don't have your Bitcoin because we didn't sign. But if we wait till layer 4, then they could steal your Bitcoin. So we're coming in and we're kind of saving the day. We're moving your Bitcoin to safety before the vault becomes fully sovereign. Now you could say, well, what if the thieves are smarter than that? Like, what if they're like, no, don't just give me your keys. We did our research. We know that you're an AnchorWatch customer. We know they're a required signer. Convince them, that you're buying a house and that you need to move your own Bitcoin. And so AnchorWatch, we do our compliance. We talk to you. You're a great actor. and with a gun to your head, you're explaining to us that you're buying a house and everything's fine, no emergencies here, and one way or the other, you convince us to go ahead and sign a transaction for you. We send off the Bitcoin. Now the Bitcoin actually has been stolen, right? So the Bitcoin moved to where the thieves wanted it. In that case, then you're calling us back once you're safe, and you're like, okay, I told you I was buying a house. I am not. I am not buying a house. Here's the actual situation. Gun to my head, gun to my wife's head. None of that was true. Now we're filing an insurance claim. So we file an insurance claim, we do an investigation. It's a kidnapping. You were wrench attacked, right? So you were forced to hand over the keys and forced to convince us to sign the transaction. And now you're covered by the insurance. So everywhere that we are able to plug the hole of the tech where somebody could infiltrate anyway, then we try our best to then cover it with the insurance. So one way or the other, you're not ruined, right?
Mm-hmm.
So then next, what happens if you pass away? So if you die and you're the Bitcoin expert in the family, and maybe your wife just isn't comfortable with the keys and how to control them, and just this treasure map and the file cabinet where you're explaining where the seed phrases are. It's like you're not you're not fully confident that that's going to actually make it where you want it in the case of your death, right? You hope, you do your best, but it's very intimidating. So that's one of the benefits of this vault, is we can say, even in that case, even if you die, all your keys are lost for that reason, your wife can come to us as the beneficiary on your policy. Say Mitch passed away this year. Here's the situation. We're going to check death certificates and check identities, do all that kind of compliance work. But assuming everything is on board, then again, we can use this recovery layer to actually support her. So if she wants to continue holding Bitcoin, we can set her up with a brand new vault. We can educate her. And ultimately, with the help of the recovery partner. So AnchorWatch is not a custodian. We can never, ever, by design, we can never move the Bitcoin alone. So we have to have Coin Corner's help. But we can do that, and we could move her Bitcoin then to, again, a safe location. And then I guess the last thing I'll drop in here is then we do get questions on, so, okay, now I understand why the recovery layer exists. I like that. I like the safety for inheritance. But what happens if AnchorWatch and Coin Corner collude? I don't like that risk. Now I'm exposed to this idea of AnchorWatch and Coin Corner colluding to steal my Bitcoin when that recovery layer opens. And actually, that is a specifically called out covered loss within the insurance policy as well, because this is a Lloyd's of London insurance policy. You're not trusting AnchorWatch, the new company. You're trusting Lloyd's of London, the oldest insurer in the world. So in that case, your Bitcoin moves without your permission when it's in layer 3. You file a claim, AnchorWatch does its investigation. If AnchorWatch committed fraud, participated in collusion, and fraudulently moved a customer's Bitcoin, then that is also a covered loss, and you would be covered by the insurance. So everywhere that we can protect you with the technology, we protect you with Bitcoin native tech. Everything I described is on chain, so it's verifiable on chain. The way I'm describing how the vault works, you don't have to take my word for it, because this is visible in the output descriptor on chain. But everywhere that we can't protect you with the tech, then you're protected by the insurance. So,
right. So you would be able to,
things,
you would be able to prove that, like, if the layer 3, let's say you and Coin Corner collude, you could look at the keys that were used to sign the transaction and prove that it was collusion.
I mean, you would be able to prove that it was signed by those keys.
Right.
And even better, though, what you can also prove is before you even put your Bitcoin in this vault, you can verify that what I'm describing to you is accurate. So we would, if you became a customer, we would set up your vault, right? So you would come to us, you would have your own signing devices, you would generate your private keys yourself using the hardware wallet, and then you have now an empty vault that is your vault. It's your PO box, right? if you wanted, you could actually take what's called the output descriptor of that vault, which is kind of like in Bitcoin script, it's kind of the rules of the vault. And you could take that vault, the output descriptor, to any expert in Bitcoin script, and they could actually read the output descriptor of the vault and confirm to you that when everything I just described, it's our keys and your keys. There's this time lock that works in this amount of time. AnchorWatch cannot ever unilaterally move your Bitcoin without you
Hmm.
or without CoinCorner. They can actually verify that for you before you even put your Bitcoin in your vault if you really want to. So that way, like, you can feel confident that the vault works how we're saying it works. And then, yes, to your point, if the Bitcoin moved, then that would be an on-chain transaction. You file a claim, and then again, any expert could then look at that transaction and be like, "Yep, this transaction was signed by the AnchorWatch keys and by the CoinCorner keys." And then you would call the FBI,
Right.
and then it would be us on the hot seat trying to explain why we moved this Bitcoin. So either way, you're either protected by the tech or you're protected by the legal system and the insurance product.
So fascinating. And now, are these layers fluid? Like, let's say I croak on day 379, and then my
Mhm.
wife takes time to grieve, and then
Right,
she's realized, oh no, like, I don't know where the keys are. Can we
right.
still do the layer three recovery?
Awesome question. So the cool thing about time locks is once a spending condition is available, it's always available. Because remember, the smart contract is saying if the key signs and if this amount of time has passed.
Mm,
So once layer three opens up, it is actually always open. So even if you died partway through the year or right before recovery, before the vault became sovereign, and she was, as you say, busy grieving, dealing with funeral, dealing with family, and it didn't even occur to her for 3 months or for 6 months or for a year to even deal with this. And then she's like, oh no, the Bitcoin, right? Even at that point, she could reach out to us. Then we would do the compliance, and we would then us and Coin Corner together would still be able to help her. So it's not like the recovery layer opens up on day 335 after we create the vault, and it becomes fully sovereign on day 380. Right. So you've
gotcha.
got 45 days there, but you don't only have 45 days. Right.
Hmm.
It's like once you hit that point, it's always available to you. So we'd be able to help her, as long as the companies exist and those keys exist, we would be able to support her.
Yeah. Are these days exact, or are we looking at block height and it's more of a rough estimate?
It's a very, very accurate estimate. But yeah.
Okay.
So you can actually use block height or wall time, but either way, we can estimate down to like close to the hour or so. So uh,
Hmm.
yeah, we feel really confident. And so really it's just timed to behave this way that it behaves in concert with your insurance policy. And then at the end, let's say you're approaching the end of your 1 year, and so you're approaching layer four, and you're a happy customer. Nobody died,
Yeah.
nobody's wallets were stolen. You just want to start a new year. You and I would come together annually, and we would sign a transaction and actually move the Bitcoin to an identical vault but with new dates,
Hmm.
right? And we would just start the year all over again. So you would be back at layer one, out of recovery. And so if everything is going fine, we're never using the recovery layer. Like,
Hmm.
the only reason that typically it would always be the customer is signing and AnchorWatch is signing. We're protecting you from theft and other things. You're protected against us by holding your own keys. And we would just
Hmm.
keep repeating that process indefinitely, as long as you want to be our customer.
Awesome. Now let's talk a little about the insurance side of this,
Sure.
because let's say I have 10 Bitcoin in a vault. Bitcoin's at 100,000, so I have $1 million worth of Bitcoin,
Yep.
and I'm insuring the whole stack. Now, am I insuring 10 Bitcoin, or am I insuring $1 million? If Bitcoin does a 10x, and let's say I lose my Bitcoin, do I get 10 million back, or do I get 1 million back?
Yep. So currently, you are buying a dollar denominated insurance policy. And let me first explain why. So right now in the United States, we're kind of forced that direction. So you're buying a $1 million insurance policy. The reason for that is that uh, insurance companies currently cannot hold Bitcoin on the balance sheet without impairing the balance sheet. So it's considered what's called an unadmitted asset, which means they don't get credit for it in their pool of collateral. And so even if they wanted to hold Bitcoin on the balance sheet, they would have to dollar for dollar hold dollars, which more or less cuts their profit in half. So currently, they're just not doing that. And we cannot offer Bitcoin denominated policies in the United States yet.
Hmm.
We think that that's a great product because it totally takes away that price volatility that you're talking about. You would have a 10 Bitcoin policy, you would pay your premiums in Bitcoin. If you had a loss, you would get paid out in Bitcoin. We're very eager for that to be available in the future, and we're advocating for it. Now, with the current policy, though, it's still a very high quality policy as structured today, even in dollars, and it's pretty straightforward actually. So it's a $1 million policy. What that means is you are simply paying for the amount of insurance you're getting. So it's not confusing. Like you're paying for $1 million policy, you have $1 million policy. So even if the value of the asset goes up, you still have $1 million policy, but that's what you've paid for as well.
Hmm.
So I like to use the analogy of a painting. Let's say you're an art collector and you have instead a $1 million painting. You get your painting assessed, it's a $1 million painting, and so you buy a $1 million insurance policy. Let's say that artist is very hot right now, right? So all over the place, super hot, the art market is hot, and halfway through the year, it's a $2 million painting, right? So it's reassessed, and now you have a choice. You can either call your insurance agent and say, hey, this is now a $2 million painting. I want to increase my limit to 2 million bucks.
Hmm.
And they'll send you an invoice for a prorated insurance premium. You'll pay it, and now you have a $2 million limit, right? So now
Hmm.
you've paid for a $2 million limit and you have the amount of insurance you've paid for the balance of the year. Or you can say, I'm actually just going to stick with the $1 million policy. That's enough. It's enough that I know my wife will be able to pay off the mortgage and take care of herself. And this is the amount of insurance I'm willing to pay for right now. So I'm just going to stick with the $1 million policy. So at least in terms of value,
Hmm.
you're never like overpaying or underpaying. You're getting the amount of insurance you pay for. So for now, it works just fine. And we're here. You could increase your policy at any time during a bull market if you want to. The other thing I want to call out with that is we get questions. Bitcoiners are a suspicious type, and rightfully so, right? So a lot of the questions we get on the dollar denomination of the policy is about timing. They're like, I know what insurance companies do. They're going to draw out this process. And they're
Hmm.
going to draw it out if I have a claim for as long as possible. So by the time I get my $1 million, Bitcoin will be worth so much more and I'll be ruined. And that's not accurate either for two reasons. One, Lloyd's of London, they're insuring in dollars. They don't care about the Bitcoin price at all, right?
Hmm.
So for them, this is just an insurance product. They have no motivation to draw this out based on the Bitcoin price. They're not going to win at all. So
Hmm.
there's no ulterior motive to stretch this out. They also Lloyd's is famous for paying claims fast, like famous. They're the oldest insurer in the world. They do the weird stuff. They do fine art. They insure the NFL players' arms. They're used to odd things. They're going to come in if we file a claim. If you have that wrench attack happens and
Hmm.
we move, they're going to come in. They're going to quickly assess the situation and they're going to determine, is this a covered loss or not? According to the policy, is the reason that you lost your Bitcoin one of the covered items? Is there anything that makes them think that you're being fraudulent? And very quickly, like within a couple of weeks, they're going to determine that they're going to pay the claim. And
Hmm.
once they have made that determination, they pay immediately, like sometimes like within a day. right? So that's how quickly this moves. So there's a little price volatility risk, like from
Hmm.
the time you have a loss, let's say even a month passes. There is a little price volatility risk in that month, but it could go in your favor,
Yeah, it
right?
could. I
You know,
was I was sitting here thinking, if I have $1 million policy
yeah.
and Bitcoin goes into a bear market,
Yeah.
now my 10 Bitcoin are worth 500K. If I lose them, am I getting still paid out 1 million, or am I getting paid out less
No.
now?
So just like any other property insurance policy, they're going to pay you out in the value of the asset. But what we convinced them to do, because we're Bitcoiners too, we are very familiar with the volatility of the asset. So there's a deductible on the policy. The customer can choose when they sign up whether it's a 10% deductible or a 25% deductible. And so, just like any property insurance, car, house, whatever, there's a deductible. So, what that means is let's say you chose the $10 million deductible. If the Bitcoin is worth still at least $1 million or more, and you have $1 million limit, you have a 10% deductible. When you get paid out, you're going to get paid $900,000
Hmm.
minus the 10%. So, you're taking a haircut, right?
Yeah.
But it's predictable. What we were able to convince them to do to make sure that we're offering a good value to customers is if the flip side happens, if the Bitcoin is worth $500,000, they agreed to waive the deductible. So in that case, we're going to pay you the full $500,000 with no haircut.
Hmm.
And then you can immediately, if you choose to, you can take your 500,000 straight to the exchange and you can potentially make yourself whole in Bitcoin terms. And so really the only thing you're faced with is that little bit of price volatility risk from the few weeks of assessing the claim, which could go in your direction, but no deductible in that case.
Yeah, that makes sense. So if you're actually having to file a claim, you kind of want it to be a bear market instead
You
of a bull
do,
market.
actually. I mean, since the tech is so robust, it would be very, very hard for a customer to successfully commit fraud. You know, they
Yeah.
it would be very, very challenging, which is one of the reasons the insurance is affordable, is because it's just so robust. And so we're not too worried about people gaming the system and like making
Right.
a loss happen in a bull versus a bear. But I will say, if you're going to have a claim, yeah, it's better to have it when the value is down because you don't pay a deductible.
Right. Well, that would be so silly to try to commit fraud with something like this, because you can see the coins move on chain.
Boom.
What are you going to send it to a KYC exchange where your identity is attached to it? So, like,
Right,
doesn't
right.
make
Well,
any
so
sense.
here's the thing with that. So what I think is going to happen. So we would never expose our customer's identity, right? So we would never say Mitch is an AnchorWatch customer.
Hmm.
Mitch, you can say you're an AnchorWatch customer, and we're happy for you to do that. We would never, compromise your privacy that way. But what I think is going to happen over time is that I think customers will want people to know that they use AnchorWatch because not only is it really hard to steal from you because they have to kidnap you. They have to hold
Yeah.
you for days, right? Right? Because we're a required signer. So first of all, it's going to be very hard to get the Bitcoin from you with our system to start with. And then if they do, technically in insurance, a stolen asset, once we've paid you out, it actually becomes the legal property of the insurance company. So if the painting is stolen, you get paid your claim. Actually, that painting belongs to the insurance company now. And so they hire private investigators to try to hunt down that painting. They'll hunt it for years because it's theirs.
Hmm.
If they can recover it, they can recoup some of the losses that they experienced by paying you out. It's the same with Bitcoin. So if we pay you out, if those thieves successfully move the Bitcoin, it's on chain. So we can track it forever, right? Forever. Uh, and we will have the resources with Lloyd's of London, and we are motivated to hunt them forever, right?
Right.
Right. So, and now we're in a forced hodl situation. So you might have 10 Bitcoin that were stolen. If they move it and then it just sits there and they don't touch it for some years, right? Now the Bitcoin is going up in value. I'm only getting more and more motivated to continue hunting you forever,
Right.
right? And with Lloyd's, again, we have the resources to actually do so.
Hmm.
So not only do the thieves have to pull off the sophisticated heist, they have to never make a mistake for the rest of their lives. right?
Right.
So actually stealing from an AnchorWatch customer is the very worst person to steal from. Like
Yeah.
it is it is the worst target to have. So I
Yeah.
actually think just being a customer of ours will actually keep people safer.
Yeah, because I mean, it fundamentally it makes sense. Like if you broadcast to the world, oh yeah, I use single sig Bitcoin custody, they're gonna come right for you. Versus if
Right.
you use Anchor Watch, there's just so
Mhm.
many more, hoops to go through to even get it, and then you're
Yeah,
being tracked by Anchor Watch and Lloyd's of London. Plus,
totally.
I imagine as they're forced to hodl and Bitcoin continues to go up and up, like the temptation to do something quick and make a mistake is going to increase.
You
So
got
it's
it.
just all
You
around
got
a bad situation.
Yeah, and customer like some people, especially long-term Bitcoiners who have become accustomed to self-custody. Some of them, feel really confident in their ability to withstand attacks. They've got a decoy wallet that only has a little bit of their holdings. They've got a passphrase. They've got the keys dispersed all over the country. They've done a lot of things, but as your asset goes up in value, your $1 million of Bitcoin turns into $10 million of Bitcoin. Like those thieves become motivated. They're
Hmm.
willing to sit in your house and keep you kidnapped for some days, right? This is a lot of money we're talking about, and so I just think people have some people have confidence in their ability to withstand an attack. I don't know. I think if somebody put a gun to my son's head, I don't think I would withstand for very long.
Right.
I think
Right.
I would probably hand over whatever I needed to keep my child safe,
Yeah.
right? Uh,
So what's the trade-off here then? Because you're protected from a wrench attack, you're protected from user error, losing your keys, you're
yeah,
protected from a fire destroying your keys.
yeah.
What is there any sort of trade-off you're making? Because it seems like you can even move the coins at any time, right? So you're not even forced to hodl necessarily.
No, you're not forced to hodl. We give you a really significant discount on the rate if you choose to hodl.
Hmm.
So, but that's not enforced on chain. That's not how Bitcoin tech works. We can't say, you promise to not spend if a spending condition is available. We'll give you a discount though. I mean, I think the downsides really come down to for people who are really, really concerned about the idea of trust would be, I would say, layer three. So layer three, where AnchorWatch and Coin Corner have those keys and have the ability to move the Bitcoin for you. You have to determine for yourself, like, do I think that's a bigger risk of these two companies colluding to steal my Bitcoin, even though they're independent companies with a track record and backed, all those things? Do I think that's a bigger risk versus all the risks of self custody? And we have effectively solved that with the insurance contract by making sure that that is specifically a covered peril. So we think we've solved for that. And then I guess the one last trade-off for customers to consider would be government seizure, right? So at the end of the day, a customer, if they're in solo self-custody, they can tell themselves that if the government comes for them, they can just resist. You can put me in jail if you want, but you can't force me to hand over my keys, right? and
Hmm.
and they like that, right? And whereas with us, the government could force AnchorWatch to turn over keys, and they could, in theory, then work with the UK government or the Isle of Man government to also force Coin Corner to hand over their keys. So I think government seizure is probably the one thing that AnchorWatch can't really protect you from.
Hmm.
And so we're pretty transparent about that because we want customers to understand what they're getting. But pretty much anything else, like we have spent 3 years game theorying this and
Hmm.
having very suspicious Bitcoiners poke holes. Well, what if this happens? What if this happens and that happens? How do I trust you? What if the tech is bad? What if this? What if that?
Right. Right.
And like we have answers for it. We have not gotten a question we can't answer. Like truly, not one.
That's great to know. And it seems like governments, they don't move quick too. So there's only what, a 30-40 day
It's
window
40
between.
45 days before the vault becomes sovereign.
Right.
So the customer, if they still have access to those keys As soon as you hit layer 4, then you can move the Bitcoin yourself, right?
Right.
So that risk. So it's just this window that you would say, okay, well, what if these two governments agree, and the both governments force both companies, and yeah. So I mean, again, I would never. Every now and then, I'll hear a customer. They'll say something about how more or less they're going to resist,
Mm.
a government. As a customer, I wouldn't trust it. I would
Yeah.
never
Well,
trust.
you could also just like before you get to layer 3, could you start over the vault?
Exactly. Yeah, you could. So we could more or less cancel the policy and immediately renew and just
Hmm.
put you on a brand new policy. And so we could actually stop the vault before it hits layer 3 and just go right back up to layer 1 again.
Right.
Right? So, but that doesn't remove that premise, right? Because we'll return there in the future.
Right.
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 So yeah, so I mean, I think that is really, really the only thing that either the tech or the insurance can't really perfectly protect you against. But pretty much everything else we feel pretty solid about, and it's verifiable on chain.
Yeah. Becca, I appreciate you coming on. I mean, I hear all the time from altcoiners that, oh, there's no innovation happening on Bitcoin, nothing exciting. Like
Yeah,
this totally blows that hypothesis out of the water. So
yeah.
I thank you for coming on, sharing
Of
about
course.
AnchorWatch. Where can the audience go to kind of learn more about this and get their hands wet with it?
Yeah, anchorwatch.com is the most obvious place. We're very active on Twitter. We're responsive to questions, so they can get more info there. You can hit us agent at anchorwatch.com if you want to get a quote. I'm Becca at anchorwatch.com. You can reach out to me directly. But yeah, we're happy to answer any questions. Dive into any of the details that we talked about today, tech or insurance, the specific coverage, whatever people want to feel comfortable. We're here to answer those questions.
Awesome. Thank you, Becca.